AMD stock is under $90 and actually closer to $82 at the time of making this video. Now, at the time of making this video, pre-market, the US futures are looking very, very green. Europe has been very green and Asia markets have been green as well. So yeah, might be a very good day for the stock market finally. I mean, Monday was already a crazy day overall. We did end flat-ish, although some stocks were quite green. But Tuesday, at the time of making this video, it does look like the markets are going to be pretty green. But in this video, let's talk a little bit about AMD, why AMD has actually been hit harder than the other stocks, especially since, well, AMD has been hit even before this whole tariff war has exploded. So let's talk about that, and then we'll touch a little bit more on the macro news as well. If you enjoy this type of videos, hit all the buttons. Would really appreciate that, especially the subscribe one, closing in on 90,000 subscribers. So really appreciate all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. And special thanks to FinChat as well for sponsoring this video. A bit more on them in just a bit. All right, so looking at AMD right now, it has a market cap of $135 billion, trailing 12 months PE of 85.8 times, but next 12 months sits at 18.4 times. Now, of course, right now that sits at 18.4 times because this is based on, well, analyst expectations. Now, of course, the analyst expectations can change because of everything that's going on right now with regards to the tariffs. So although from a forward PE's perspective, things are looking great and has been looking quite good actually in the last couple of weeks, not just for AMD, but for plenty of other companies out there as well. If analyst expectations come down, that forward PE will go up, right? These are pricing metrics, not actually valuation metrics. These are pricing metrics. So yeah, right now, still right now, 18.4 times. Yes, this is looking extremely cheap. Now, if you look at the current expected growth rate for revenue, 2 years out, 21.9%. If you look at EPS, that's at 37.4%. So still expected to grow quite rapidly. Of course, I do expect some changes here, especially after the next earnings report. Now, all in all, for the long run, yes, I still strongly believe that AMD is going to be a huge, huge winner. Now, currently, if you look at the most recent drawdown, well, a drawdown that has actually started in May of 2024, well, the stock is down 60% since. If we actually look at the year-to-date performance, the stock is down 30.5%, and in the last month alone, the stock is now down 13.2%. Now, this morning, AMD got hit with a downgrade from KeyBanc to sector weight from overweight. They are downgrading AMD given 1. Increasing concerns regarding the sustainability of its China AI business, growing risk to gross margins amid a potential price war with Intel, and third, limited share gain opportunities versus Intel as the company makes progress on its 18A process. While the company is relatively inexpensive, trading at 13 times their 2026 EPS estimate, semiconductor stocks rarely perform well when there is risk to gross margins, which is increasingly concerning given Intel's aggressive price cuts. That said, we are raising our revenue and EPS estimate for AMD due to stronger demand for the MI308. This is maybe going to be a mistake here. It's probably MI300 series and PCs from pull-ins, but we are simultaneously lowering our gross margin assumption. So although this is a downgrade from, well, overweight to sector weight, yes, there are some concerns here. And to be honest, I don't think this is the first time that an analyst is actually talking about Intel actually coming back and competing with AMD. Me as a shareholder of Intel and AMD, I like the sound of that. But all in all, they still remain quite confident on AMD. Now, as we've discussed previously, if you look at China, right, revenue generated from China, that has gone up quite significantly, especially since 2019. But even since 2023, it previously peaked $5.2 billion in 2022, then dropped to $3.4 billion in 2023. But in fiscal 2024, that was at $6.23 billion. Now, USA is at 8.69. So yes, that's still the largest chunk of the revenue, but 6.2 is quite big. So if again we have a year where we go from 5.2 to 3.4, so here from 6.2 to let's say $4 billion, well, that's a $2 billion difference. Now, of course, right now we are in a phase where the data center side of things is looking much better. This is something that in 2023 we did not experience. Back then, actually, gaming was generated $1.75 billion, whereas data center only 1.29. Right now, the last quarter, data center alone was generating $3.58 billion, while gaming only generated $563 million. So we're definitely in a different stage here for AMD, but it's always important to know, even if you're bullish, it's always important to know, well, the risks or the concerns, things that, well, we don't know at the moment. And one of those things is, well, the China exposure here. To be honest, remains to be seen. We're probably going to get more information in the next earnings call from Lisa Su and from the CFO. Now, currently, as you know, free cash flow wise, the current expectations are that in fiscal 25, that's expected to grow 181%, followed by 16.9% year-over-year growth in fiscal 26, and then another 43% year-over-year growth in fiscal 2027 to reach $11.32 billion. That's up quite significantly from the $2.4 billion that we've seen back in fiscal 2024. All of that data, of course, is available for you on FinChat. FinChat is a stock research platform that you've probably seen plenty of times on my channel. Now, unlike many other platforms, well, with FinChat, you can actually look at specific metrics for each and every company. So for example, with AMD, we can go to segments and KPIs. And by the way, they also have a co-pilot feature where you can basically ask it questions about AMD, maybe about its competitors, and it will give you the necessary answers plus the sources as well. So here, if we go segments and KPI, I've shown you basically the revenue by geography, but you can look at EBIT per business segment. So the computing and graphics one, although that is only going to 2021, but then we have the updated one right here. So let's take EBIT for the client, data center, gaming, and embedded. And here you can basically see it very, very well visually. And this, to be honest, shows you how profitable the embedded segment is, right? Because if we go and look at the embedded revenue, right? This is the revenue for embedded, and this is the operating income for it. So last year it generated $3.55 billion from the embedded business. Now, out of that $3.55 billion, $1.42 billion was operating income. This is a high margin business. And as I've said in the past, I think embedded and gaming are going to turn into tailwinds. And with embedded, well, for 2024, they said they had over $14 billion in design wins. I think that's going to be quite a big tailwind for AMD, probably in the back half of this year. Now, like I said, all of this available for you on FinChat. If you're a new user, you can get 2 weeks of FinChat Pro for free. If you like it, you want to upgrade, you can use my link. You'll get 15% off. So thank you very much for using it, especially those that have already used it. I really hope this makes your investing journey much easier. Switching to some macro-related news here. So first up, a little, add-on from yesterday's video, because someone commented on the fact that, oh, you only have 3 data points to work here with. This is not how statistics work. Yes, 100% of the time we went green, but this is only 3 data points. Correct. This is only 3 data points because this is how rare this case is right now, right? If it wasn't that rare, we would be seeing way more data points to work with. So of course, only having 3 dates here is not telling you, as much as you would like. But the fact that I can only show you 3 dates should tell you how rare this situation actually is. Plus, if we go back a couple of days before, right, I showed you this one where we only had 2 consecutive days of 4.5% declines without having the 3rd day also being red. Well, here you have more dates, and I would assume that this is enough data for you. And here as well, the data is, the odds are in our favor. So just wanted to touch back on that. Moving on here, the 10-year yield is back at 4.2%. So quite a big increase in just 24 hours or so. Now, yesterday, something crazy happened on X. The Chinese embassy in the United States tweeted out at real Donald Trump. That's it. That was the tweet. Thank God I screenshot it because they already deleted that. Hopefully they didn't delete their intern, right? Anyways, the China Commerce Ministry said that they urged the US to properly resolve its differences with China on the basis of mutual respect and through dialogue on an equal footing. that's not all. China will resolutely take countermeasures to safeguard its right and interest should the United States escalate its tariff measures, the country's Commerce Ministry said on Tuesday. China will fight till the end if the US side is bent on going down the wrong path, and according to some reports, they are not going to import any American movies or any Hollywood-made movies, which of course are American movies, which means that Donald Trump successfully managed to save the Chinese people from watching Snow White. Bravo. And just an FYI, I discovered this morning. If you look at the highest grossing films of 2025, 4 out of the top 10 are Chinese ones, and the number one, this one right here, is already at $2.1 billion, and this is an animated movie. Apparently, the reviews are incredible, so if you were looking for a movie to watch, I guess this one should be on your list. Moving on, apparently the Vietnamese dong weakens to all-time lows against the dollar. I guess it flopped, and yeah, you can make so many jokes here. So a weak dong is not always great. Moving on to some Tom Lee comments. So Tom Lee came out, apologized because, well, they basically said, and we've covered this on the channel, they basically thought that the April 2 deadline was going to be a bullish date for the stock market. Didn't happen because, well, they were anticipating things to not be as aggressive as they were when it comes to the tariffs, or I don't even know if you can call it counter tariffs because the calculation behind that doesn't really make that much sense. But okay, they apologized and they talked a little bit about, well, the probability of actually maybe seeing a rebound and then maybe the market stabilizing. And they also answered here the question, is Trump trying to kill the stock market? So point number one, Main Street over Wall Street means companies take EPS hit, not let stock market fall. This comes, of course, after the Stock Besant interview when he said that Main Street is more important than Wall Street right now. But Tom and probably many others, myself included, still think that yes, a good stock market is definitely high on the list for the current administration. Now, how will they help Main Street? Well, they could end taxes on Social Security, they could end taxes on tips and overtime, deduction interest for domestic-made cars, and lower interest rates. Now, why do they think there is not going to be a recession? Although some people think that we are already in a rolling recession or just a normal recession right now. They said the following: consumer take half hit of the tariffs, oil prices to $50 from $70, lower floating interest rates around 100 basis points, lower mortgage interest rates, same thing here, and reconciliation bill with tax cuts. So companies take a hit by onshoring. So this is basically the hit and the savings that's expected. Here you can see the percentage of stocks above the 200-day moving average that sits at 23%. So here as well, we can play with our odds, the probability. We can see that a year later, a year after this happens, we have a 92% win rate. 6 months later, 94% win rate. All of these dates right here. But if you only look at the last 10 years, we have a 100% win rate. So again, we're just looking at the odds and we're trying to make here a story that makes sense, or a story that's at least based on the data that's available for us. Now, as you've watched my last couple of videos in the last couple of days, more macro oriented, you've seen that we had, well, the odds were in our favor, whether it was 67%, 73%, 80%, 90%. Well, unfortunately on Monday, we were actually on the flip side of things, right? So just one day later. Of course, now we are 2 days later. So the 2 days, yes, now it does seem like at the time of making this video, the market is going to be green. So when you see 80%, 80% is great, but there's always that 20% probability that we might be on the red side of things. And even with the 100% of times that this and that happened, yes, maybe previously that was 100%, and maybe we might be the percent right now, we might be the odd chance that, well, the 100% track record gets destroyed. That can definitely happen, right? Just because something happened before does not mean that it's going to happen again. So, like I said, just because we see sometimes 60% probability or 100 times probability does not mean that this is going to happen yet again. And so all in all, that's about it for me in this video. Don't forget, we're going live 12:30 p.m. Eastern on this channel and on Jose's channel so you can ask all the questions that you want. Like, subscribe, and I'll see you all in the next one. Bye bye.